So I'm here to talk about A2Gold, but I'm also going to talk about Calu Group, which is someone that is a group we just recently joined earlier this year. Calu Group is, I won't mention Arganto, but the other three companies are mining companies based primarily in Mexico and Nevada in the US. I run A2Gold. I've been a partner of Javier for almost 20 years, where he decided to form Calu Group, which was a combination of all of the companies that we had invested in and had run over the past few years. And I'll mention that I think Calu Group, if I'm not mistaken, is probably one of the best performing groups in terms of a group of companies over the last 2 years. I know Luca's up 300%, 400%, 500%. A2Gold's been up 300%. Gold Group is up 300-400%. And I believe that much of that return was just returning to what I would consider the normal or average value of what it should have been trading prior to that. The reality is that Calu Group brings a lot of expertise, not only in mining and exploration, but also in how to bring the groups together and the investors and develop projects. Now, every single group has a little bit different focus. Gold Group and Luca are both in Mexico. Luca is basically a company that produces gold and silver, zinc, and lead, and also is about to double their production. Profitable. Gold Group is at the early stage of the production. It's been around for some years before the Calu Group took over it, but today it produces about 20,000 ounces of gold, 15 to 20,000. It's expected to produce over 70,000 ounces of gold next year. And then A2Gold, formerly called Allegiant Gold, is a company that has developing a 1.5 million ounce deposit in the state of Nevada in the US. It's in a US group. It's a project that could grow significantly larger, with the largest shareholder being Kinross Gold, who has the Round Mountain mine approximately 40 kilometers, 25 miles away. So it's very, very close. And each of these companies has their own appeal for each different type of investor. So A2Gold is what I run. I've been the CEO for the last 5 to 6 years. I took over the company back at the end of 2019. I came from the hedge fund world. I used to work at Salomon Brothers for 10 years. And then after leaving Salomon in 2005, I started my own junior mining fund from 2005 to 2015. I liked A2Gold because it was based in some of the best jurisdiction, I believe, in the world. It had mines all around ourselves, and it was a discovery we had just made. So a brand new discovery, not a deposit that was being rebranded or retread. This was actually a brand new discovery we made, and we've grown this deposit to over 1.5 million ounces roughly, with about 9 million ounces of silver. I think the most important aspect here, in my opinion, is that we've barely scraped the surface at our main project, Eastside at A2Gold. So I'm going to talk primarily about A2Gold, but I'm free to answer questions on Luca or Gold Group or any of the other portfolio companies within ourselves. Now, the question that everyone always asks me is, why it's taken you guys 5 years to grow this deposit to 1.5 million? And it's a legitimate question. The reality is, when I took over Allegiant at that time, A2Gold today, was a company that had no money. It was only worth $2 or $3 million. It had amazing projects, so I was blessed with 11 projects that I could deal with. And I had to really clean up and restructure the company. It took me a few years to get to focus on the main project that we wanted, as well as sell off the non-core projects. Now, that had some benefits. One of the biggest benefits is that we didn't raise money for 4 years. We had the ability to survive in a very, very difficult market by selling off projects and not having to dilute ourselves. The reason why dilution is so important is that myself, Javier, and many of the other management insiders have invested millions of dollars of our own money into this company. So there's really no free shares we had here. We actually bought in the open market like every other investor. A little bit about the Calu Group. Calu Group, we operate, much of what is done in the Calu Group is primarily focused in Mexico. Javier runs that operation. He's one of the founders, actually the founder of Luca Mining. He brought in a CEO, Dan Bartholdin, to run the company. But what we try to do is give back to the communities. I know it's a lot of people say that, but there's actually a lot of give back to the community. I was just in Mexico a week ago, or a week and a half ago, helping this child actually have an open heart surgery. And so there's a lot of, Javier has given a lot of his own personal wealth to helping children as well as specific initiatives. So our project, and going back to A2Gold, our project is primarily, well, it's in Nevada. We have 2 other additional projects, but our main focus is Nevada. We have 1.5 million ounces, but we're in probably one of the greatest jurisdictions and one of the strongest and the most prolific belts in all of Nevada and maybe in the United States, the Walker Lane Trend. There's some other great companies that operate besides us, but you know, we're focused in a town called Tonopah, which is right next to the town of Goldfield between Las Vegas and Reno. We have an additional project, Bolo and Goldfield West. But one of the great things about our project is the infrastructure. There's a main highway that comes straight into our project. We have high voltage electricity. We have water wells. And it's just a lot of talent. You have many, many producing mines around us, and Round Mountain being by far the largest, which is about 25 miles from our project on a straight line basis, or 40 kilometers, depending on if you prefer metric. Our partner is Kinross. They have invested in 2 different types of rounds with us in the initial stage in 2022, and then they doubled down recently in 2025. Kinross is one of the largest producers of gold and silver in Nevada, together with Nevada Gold Mines, which is a joint venture between Newmont Mining and Barrick Gold. Why is this important to us? Well, we're not alone. You know, we're a small company, and we depend heavily on Kinross and their technical capabilities as well as knowledge. Now, it goes both ways. So when we made the discovery of Eastside 10 years ago, we gave Kinross, prior to even being partners to us, the information, and they ended up staking pretty much over 3,000 claims in Nevada, focused on early stage or earlier dated rhyolites, because that was our theory back in 2014, 15, and 16 when we made the discovery. So this is a new discovery we made, which led to Kinross making discoveries along their way. Now, there's another thing that we did in 2021 when we made a discovery underground, is we gave Kinross, at that time, led them to invest with us for the first time, but Kinross came back, and with the discovery we made underground, they ended up discovering their mine underneath the pit of Round Mountain, what is called Phase X. So it allowed them to, by sharing data, has allowed them to make other discoveries that we're also benefit by their knowledge. Now, Kinross and us have a very, very strong and close relationship. Part of the reason is, to be fair, our exit strategy is very, very simple. It is Kinross to buy us at some point in time, or another major, but Kinross is the most likely candidate. Now, our shareholder base is one of the strongest suits that we have at A2Gold. We have 93 million shares outstanding. We have 22 million warrants, and they're all deep in the money. So that would provide over 10 million of additional capital. We have over 10 million today in capital. So we like to say we have close to 20 million in capital. It's the first time we've ever had this type of capital. And one of the reasons why it's taken us longer to develop the project in the history is we didn't have access to the capital that we have today. So we take away, it is one of the things that we have never been able to have with sufficient capital to develop our project. Now, our shareholders are Ingalls & Snyder, Eric Sprott, Kinross, IAMGOLD is a shareholder, and then management and insiders control over 20% of the of the shares outstanding. So it's very tightly controlled, and we take shareholder returns very, very seriously at A2Gold. It's one of our sticking points. Our management team and board, for a junior, is really a premier board of directors. Norm Pitcher used to be the CEO of El Dorado Gold. Javier just recently joined us a few months ago on the board, about 6 months ago. Sean Nichols was a senior advisor at Scotia and Citibank. Sean McGrath is my partner in this, is also the CFO of was the former CEO of Origin Energy, and then myself, who spent years in mostly on the investment side, investing in juniors for the last 25 years. Our technical team, led by Norm, Andy, Pete Chapman, and John Vinson, these are primarily, particularly Andy, Pete Chapman, and John Vinson, have spent the last 40, 50 years in Nevada, have made more discoveries, and put into production more mines than any other team in Nevada today, or of any other company. Now, I talked a little bit about how we depend and rely on Kinross for a lot of the information. That is true. We have a very good relationship with them. We share a lot of data. And we recently hired DeRouge Consulting, a Canadian firm out of Denver and out of Calgary, where they have basically put all of our data, historical data, and all of our geophysics and all geochem into a exploration model. And now, for the first time, we actually have a consolidated exploration model to help develop this asset. Now, Eastside is our main project, as we discussed, and Eastside is broken up into two ore bodies. So about 8 miles difference between Castle and McIntosh. They combined are about 1.5 million. But the most important part of this is that we've barely scraped the surface. We've only explored about 18% of the property. And the question is why? It takes a lot of money to explore. And given we were so concerned about dilution at that time, over the last 5 years, we decided to focus on the known ore bodies that we have. Now, for the first time ever, we just completed a geophysics study and analysis of all the entire 92 square kilometer property. I don't know how much that is in miles, but it's 92 square kilometers. It's about 9,000 hectares, about 21,000 acres. There's an entire stretch and strike lane we haven't even touched on. Could this be a much larger deposit than 1.5 million ounces? Now, mind you, the last time we did a resource estimate was back in 2021. So gold was $1,700 an ounce. We're prepping to come up with a revised resource estimate early next year, or around mid next year, which will incorporate almost 40,000 meters of additional drilling that we've done and are doing at this moment, and then adjust for gold prices. We probably would use a 3,500 gold price or a 3,000 gold price rather than a 4,000 gold price, but we would expect the resource size to grow significantly. We've also touched on the high-grade zone that I alluded to earlier, where Kinross had access to this data and led, in my opinion, to their discovery of their Phase X. It helped them go further deeper into their system at Round Mountain, and they made a very large discovery called Phase X, which I believe will be the next stage of the production of Round Mountain. Ourselves, we just finished a 2,000-meter, 3-hole deep target drill program. Just ended about a week ago, and we're awaiting assays, which should be coming in the next probably 4 weeks. People always ask me, why don't you release a hole at a time? That is contrary to how we actually manage the company. We believe that assays should be released in a group, at least 3, 4, 5 holes as opposed to 1 hole. So it's just not the way we operate. I got asked this question earlier today. And then that ultimately will culminate in an updated 43-101 resource report, something that we haven't updated in over 4 years. So we would expect this asset to grow significantly. Why is that important? Well, if you're a junior company, at least when I was running my fund and I was working at Solomon Brothers, the first thing I would ask a company is, what's your exit strategy, right? So is your exit strategy go to production? Is your exit strategy to monetize the asset by selling it to some company? And I think that whether you're with A2Gold, Luca, GGA, or some other companies that you're looking at, the first question you should ask management is, what is the exit strategy? Most juniors can, and I've only met one, that can actually take a project through exploration, development, and into production. It's very, very difficult to do. I'm a firm believer that you need to be focused on what's your goal and what's your objective. Our objective simply is to grow a large asset that makes it attractive to a major or a mid-major, and a little bit different because a major won't look at a project unless it's over 3 million ounces, In the case of Kinross, it's maybe a little bit different, a little bit lower, because Round Mountain is so close. So there's so many shared resources. If Kinross were to acquire us at some point in time by acquiring a smaller deposit, but although we do think, and I think Kinross also believes this, but you could ask them that this is going to be a major multi-ounce deposit. This has the potential to be one of the larger deposits in all of Nevada, heap leach oxide type of deposits. So just some fact sheet, and it's actually in the presentation, and you can take one. We've budgeted about $5 million US for exploration. We're fully funded for that, and significantly more than that. Just some other types of some data you can look at, but we are confident and pretty excited about what we're doing at Eastside, and we believe that this is one of the few real projects out there that can become a mine, and a large one at that. A little bit about our specific deposits. We have two zones, the McIntosh zone and the Castle zone. McIntosh zone is where most of the resources lie. However, it's also where the majority of the work that's been done. And if you look at the purple area, that's the actual pit shell that we've designed, and then the pinkish area is all the upside what we can do, and we plan to do step-out drilling in early next year, and the goal of that step-out drilling is to extend the pit shell to encompass a much larger ore body. Now, Castle has 3 small subzones. It's in the south of the property, and the goal of this upcoming drill program will be to connect those 3 zones. If we're able to connect those zones, then the resource size of that deposit alone will be significantly larger. So it has the potential, without making any other discoveries at Eastside, just these 2 zones could be significantly larger in itself, which represent about 1.5 million ounces today. So our exploration program this year, we've already completed 2,000 meters already. We're going to embark on an 18,000 meter program starting within the next month. We've completed a property-wide geophysics survey. It's the first time we've done a property-wide geophysics survey, and I presume over the next week, we'll be announcing to the market the results of that geophysics survey, and also outlining many of the targets that we plan to address in the coming months through our drill program. Our goal is pretty simple, and it's very straightforward. It's to grow the resource size to a point where not only Kinross, other companies which are surrounded by us. So to our west, immediately to our northwest is AngloGold, and I mean to our property line. To the west of us, on our property line, is Hecla. To our southwest is a smaller company called Bitterroot, which has recently staked ground around our Castle area. Kinross is to our east. And henceforth, we have a significant amount of majors and mid-majors that are surrounding us looking for the next size deposit in Nevada. And once again, we'll end up with a 43-101 updated resource. The last time we did it 4 years ago, we have 1.5 million ounces, 1,700 gold. We believe that could grow significantly in the next report. I'd be remiss to talk about 2 other projects that we have that we've spent almost no time or effort, and the reason is that it's very, very difficult for a junior to do 1 project, let alone 2 or 3 projects. But Bolo was, when I got started at Allegiant at that time, A2Gold, was probably the hottest exploration project in all of Nevada. Now, the previous management actually farmed it out to a company, and the other company earned into 50%. So A2 only had 50% of the project for the last 6 years. We took advantage of that the other partner was in a difficult financial condition to actually acquire the remaining 50%. So we've now consolidated what I would consider one of the best exploration projects in all of Nevada, earlier stage. But there's clearly a resource here. There's been $8 million spent here. No one has bothered, or the company that was the operator prior, we always owned 50%. didn't bother to calculate a resource estimate here. So one of the things that we're considering is actually coming out with a resource estimate here and either developing it ourselves or end up selling it to another company. We've had multiple offers over the last 3 years to acquire this project. Unfortunately, they just haven't been great offers. It's been a very poor market up until the last 12 months of this year, of the last 12 months. And then Goldfield West is another project that has a lot of promise. It's a project, we're surrounded by Centerra to our east, and then Kinross has a large project called Montezuma to our west. So Kinross and Centerra are right next to us, and then AngloGold is about 20 miles southwest of us in their major project called the Silicon Project near the town of Beatty, Nevada. So we have probably one of the better portfolios out there in Nevada, but our focus has always been Eastside and will continue to be Eastside. It's a large project. It's one of the larger projects in all of Nevada, maybe even too large for a junior, to be fair, but all of our efforts and all of our concentration goes into Eastside because we actually believe this could be a major, major gold deposit. Not only us, but also Kinross. So our next steps, just as we've talked a little bit about this, is we finished it, we've done the financing, we're properly financed for the first time in our entire history. We've finished a 2,000 meter program, which we announced that we finished a week and a half ago. Results are pending. We finished a property-wide geophysics program for the first time in our history, and we're right about to embark on an 18,000 meter RCN expansion drill program. The purpose of that is threefold. First is to do step-out drilling within the pit shells of those two pit shells. The second is to do infill drilling within those pit areas to increase the resources within those two deposits. And then three, we plan, according to our IRA, which is not the retirement savings, but it's an investor rights agreement we have with Kinross, is that we have to do a minimum level of exploration. Now, Kinross's belief, their words, not mine, is that we have yet to find the best deposit within Eastside. So Eastside being the entire district, McIntosh being our north, Castle being the south, they believe there could potentially be significantly more deposits within that area, a true district-wide project. And then that will end with a revised 43-101 and potentially a PEA on one of the two ore bodies. Now, I'm going to take a step away from A2Gold for a second to mention what I think is occurring in the mining sector, which is very much a new development. I've spoken about this on numerous podcasts and interviews. That recently, because of the emergence of blockchain and cryptos, there's an effort, and I'm kind of leading this effort on one side of it, which is the actual tokenization of resources. So if you're a junior mining company and you have a resource, whether that's inferred, measured, and indicated, PEA, you have two exit strategies. One is to develop the mine and put it into production, and the second is to actually sell it. Those are your two options. And you're at the whim of the market, the capital markets, to help finance your venture. I believe that there's a third element that's been developing, and it's developing very quickly, which is the tokenization of actually your inferred resource or your in situ in-ground resource. Now, that's not to say we're going to do it or someone else is going to do it, but the juniors are extremely cheap relative to the price of gold. And we'll talk about that on the final slide I'll talk about is how do you value these companies? I spent 25 years from 1996 to 2015, so what's 20 years, or 2019, 24 years doing this as an analyst and as a portfolio manager for Solomon and for Carrollton. And I'll tell you how we used to look at it and how we got involved. So, this is just a rehash of what we discussed. So I put up this table to talk about valuations, and this is all in US dollars, not Canadian dollars. So we did an analysis about 5 years ago on, not at A2Gold when I was at Carrollton, maybe 7 years ago, How do you value these companies? Now, everyone talks about, well, it's $50 an ounce, $30. I just read a report on ourselves that says, well, they're trading at $50 to $60 an ounce. That's irrelevant in my opinion. $50 an ounce when gold's at $700 an ounce seems to be fairly valued to maybe a little bit rich. But gold's $4,000. It's not $50 an ounce. I've always used the metric of a percent of spot price of gold to value these companies. Because that's, in my opinion, the fairest way to evaluate a company. Because if gold is $4,000, $50 an ounce is a mere 1.2% of the value of the gold you have in situ. But if gold is $700 an ounce, then you're trading at 7% essentially of the price of spot price guide. So I've always been a big believer of it's a percentage of spot. I've used 3,500 for this analysis. Historically, juniors, inferred, and indicated resources trade at between 3 and 5%. Takeout values are between 7 and 10%. But the trading value is between 3 and 5% of spot. So if you have a 2 million, the way to read this is if you have a 2 million ounce resource and you trading at 3%, then the value of that resource of that company is about 210 million US, okay? So that is the value. Sorry, I forgot to turn off my phone. So this is how you read it. The companies, and I don't know many juniors that are trading at these levels, they're trading at a significant discount to the actual valuation or the net present value. The other way to do it is a net present value analysis where you look at what it's going to cost to produce, what's your fixed cost, what's your cash cost, and then discount that back by a 5, 7, or 10% discount rate. It doesn't matter what measure you use, juniors are still very, very cheap to 3,500 gold and possibly even 2,500 gold. The market is not pricing them for 4,000 gold yet. And that has been, at least my experience, in 2001, 2002, 2003, 2004. And it wasn't until 2004 and 5 that the market started catching up and maybe even got ahead of itself in what I believe was the last real bull market in the junior mining industry, which ended in 2007. So 18 years ago. I believe for the first time, this is the first time I'm saying this because I've been fairly bearish for many years, that this is the first time that we're actually entering a real bull market in the junior mining industry. Now, gold prices could correct 10%. I really don't care. They can go down to 3,500, 3,200. It's irrelevant because these companies are very, very cheap still. And these seniors have no other alternatives. In the 80s and the 90s, in the early 2000s, they basically gutted their exploration departments. Where is Kinross going to find 3, 4, 5 million ounces? Where is Barrick or Newmont going to find it? I mean, Barrick decided to go to Pakistan to find 10 million ounces. How did that work out? Not great. Jurisdiction still remains the most important thing. And I believe that at A2Gold, what we've done at Calu is focus on the jurisdictions that we know really well, which is the US, Mexico, and soon to be Canada. So I'm here to talk about A2, Calu, whatever you guys want to talk about the industry. I'm here to take any questions you guys may have. So thank you very much for your time. Any questions? Yep, please.
How close are you to Scorpio?
Very, very close, right across the valley. I know them very, very well. So if there were a road that went straight across, it would be 15 kilometers. The thing is that Scorpio is on the Highway 6 on its way to Round Mountain, and you have to go through back to Tonopah. So they're here, we're here, but you have to go like this to get there. Round Mountain's up here. So there's the 6 that goes all the way up. You pass by Viva Gold's Tonopah Gold Project, Scorpio's Manhattan Project, and then you get up to Round Mountain. And we are on the other side of the valley, which is about 15 miles maybe. But the only way to get there is coming back to Tonopah and going straight back up. So we're all actually, Viva, Scorpio, ourselves, are the companies with actual resources there, and we're all within that Round Mountain area.
And Kinross has an interest in them?
No.
No, not in
No. No. Neither in Viva or in Scorpio. And I like what Scorpio's doing. I think they're a good company.
Well, I got here a little bit late. How much of this, you just drilled 2 areas minimally, and you're open on all sides?
So let's go to, no, it's a perfect question. So these are the 2 zones, and I'll show you, maybe it's better if I show you to start a larger property area. So Tonopah's over here, Scorpio's over here, Round Mountain's up there, and this is where we're at. So we have 2 zones that we've identified through, and that's, you know, when you're junior, and I'm a firm believer of this, if you have something, a tiger by the tail, you keep on hitting it. And we're continuing hitting it and continuing to get good results. So for us, we never had any incentive, nor the capital, to actually explore the areas in between. Now, to get to your question, which I'm not answering yet. So the pink areas around both of those areas show the areas where there's expansion potential. So from our perspective on the McIntosh, which is the larger of the 2, there's expansion potential primarily to the south and west, in our opinion. So all of this area down here is all prospective, and we've done some great geochem, and we're waiting for the geophysics, which should be coming out either today or tomorrow. The project may be close to the east, but we're not sure. And then at depth, we'll know within this most recent 2,000-meter program that we just finished. So I don't know if it's open or closed, or we need to drill more, which in order of preference, open. Close, we need to drill more is the worst option. Always the worst option. Yes?
Talking about tokenizing to crypto, there is a company on the exchange, Gold. I don't think you're familiar with that.
No, I'm not.
They're at $3,000 a token, but I don't know that they're mining or they're just stacking gold to back it.
Yeah, so there's a lot of efforts going on to tokenizing gold, and that is clear, and there's a strong path to that, and numerous companies are trying to do that. Where I see an opportunity is the tokenization of actually in situ resources, so in-ground resources. So your gold in the ground. Yeah, so Warren Buffett has a famous saying. He never understood gold because he never understood digging a hole in the ground to extract something to later dig another hole to bury it, meaning your vaults, right? I think that the industry in the next 20 years is going to be headed to exploration companies actually tokenizing what they have in ground without having to explore it, right? Or to develop it, I'm sorry, to extract it. That's another option. And that will set off, in my opinion, the next real boom in the junior mining industry. Because if junior miners now have other alternatives besides getting into production or selling it, now I think we have a legitimate, probably the most legitimate exit strategy of any company in Nevada, juniors, that's my belief, because we already have major partners already who are looking for a large asset. We have a project that has the potential to be 3, 4, 5, 10 million ounces. We have to prove that, but the ground is there for us to prove up. One of the true major deposits in Nevada, close to all the infrastructure, which is rare. So back to your question, I don't know that. I think there's been a lot of effort to tokenize gold. What I was referring to or inferring to is the tokenization of actual in-ground resources without getting into production. Because there's a whole, I mean, and at a discount, mind you, right? So, well, each company is going to, each company will tokenize it based on their conditions, whether that's grade, size, jurisdiction, and many other aspects. And the market will decide whether that price is correct or not correct. Once again, I go back to the value of 3 to 10% of the inferred resource. Today, mining companies are making 50% margins, roughly 50% margins on the gold they're producing. So that allows for 15% type of numbers on the in situ or in-ground resources. It's a complex formula, But what most people don't realize what's happened is gold has gone from 2,000 to 4,000 an ounce, and oil prices have gone from $70 to 60. Do you know what the second largest cost variable is in a mining operation? It's energy. Number one would be labor. Number three is financing costs. And sometimes it's 1, 2, and 3. Sometimes it's 2, 1, and 3. But those are the top three costs. So gold prices have gone up. Your margins have gone up. Even though labor costs have gone up a little bit, your electricity, your power costs have gone down. And that's a rarity in the gold mine. So that's why Kinross, Barrick, Newmont, Anglo, Agnico are all printing money. Their cash flow is at the highest it's ever been. And they're depleting their resources. They need other projects. And that's where an A2Gold comes in, because they need scale. One of the factors is they need to replace their assets, but the second factor is they're not going to be involved in a 500,000 ounce project or a 1,000,000 ounce deposit. It's just not. There's two things that they look at. They look at how many years of production. They don't even look at what the cost is, actually. They look at how many years of production and can they get to 100 to 150,000 ounces a year for 10 years. That's the most important thing for them. And if it's a heap leach project, 150,000 ounces a year times 10 is 1.5 million, but that's recoverable. That means you need 2.2 million ounces of resources to produce 1.5 million of recoverable. That's, in my opinion, the magic number, is 2 to 3 million ounces to get on the screen of a big company. Kinross invested in us before we even had 1 million ounces, and the reason is they saw the potential for significantly larger size. Now, my job is to prove that up. I never had the capital to do that, so we were advancing slowly without any dilution by selling off our non-core projects, and we ended up going from 11 to 3 projects. I doubt we're going to go lower than 3, but we went from 11 to 3, and that money that we were able to generate by selling our non-core projects was used to finance our operation and development of our resource. There's still a lot of beignets there. I ate 4 of them, so.
Can you touch on the financing? I know you said you had everything in order, but looking at the financing, because that's the one thing where the cost has gone up.
To build a mine. Yeah. I would say that the cost of building a mine went up really significantly from 2000 to 2024, up like 50% actually. But over the last 18 months, it's been stable. Steel prices, energy, labor has gone up a little bit, but it really hasn't. I looked at what we did as a scoping study 2 years ago to today for a 60,000 ton a day operation, heap leach. It hasn't changed that much. Gold prices have gone up 70% though. So, and you see it reflected. There was all-in sustainable costs for the mining companies went up dramatically 2021, 22, 23, and at the beginning of 2024. They've stabilized now. Now, they stabilized at the point that gold went from 2,800 to 4,000.
So there's no financing outside of just investors right now?
So you're talking about financing for exploration or for building a mine?
For the exploration.
So there is. So our financing was done primarily with American investors with a 1-year hold at significantly higher prices. Well, now our stock is up a lot, so they got in at a very good level. I think that for very small junior companies, call that under 50 million in market cap, I think it still remains challenged to finance. And companies that are that 100 million or higher are finding it easier to finance. I think it's a bifurcated market actually. And if you're under 20 million, it's almost impossible. Well, thank you very much. I appreciate your time. Lots of beignets. He still has like 20 bottles of Prosecco, so.